Before you buy a house or a car, you need to make sure that you can actually afford it. This comment is on a post where I discuss IRS Code 162A and how you should be able to deduct all ordinary and necessary business expenses. And this commenter is basically saying that if they have a small business and they have too many deductions, could that impact the type of car or house that they are able to finance? And I will say this, it could, but if you're preparing your tax return honestly and taking only those deductions that you are legally entitled to, then if the lender declines your loan, then that means you cannot afford that house or car. Lenders like to use your income tax as a starting point to determine what you qualify for. And every bank is different, so if you're trying to qualify for a car or a mortgage loan, I would suggest talking to the lender directly and find out how they use your tax return and how they calculate the income on which you'll be able to make payments. If your business has a lot of fixed assets or real estate, the lender will add back your depreciation expense. Your depreciation expense lowers the amount of tax that you pay, but lenders add that back because you did not pay that depreciation out in cash. However, if you have an ethically prepared tax return and you are buying a house or a car that is within your means, then this should not be a huge problem. And if you're in a situation where you know you're going to be in the market for a house or car in the next couple years, then I would suggest talking to lenders on the front end, seeing what it takes to qualify, and then working with an accountant or a business manager in your area to create a plan to make sure that you will qualify for what you need. And keep in mind, if you're starting a small business and you're leaving your 9 to 5, but you're also planning on buying a house soon, keep in mind that many lenders will require multiple years of business tax returns in order to qualify for a mortgage, where you have less of a requirement if you're providing a W-2. Does it make sense? I don't know. I'm not a licensed lender. If you have any questions about how to qualify for a mortgage or a car loan, I would again suggest talking to the bank. Any other questions about what's deductible or how to handle your taxes, please leave them in the comments.